In this brief video, I'll be going through primarily the way in which we calculate the qualified business income deduction. That constitutes the major portion of the second half or second part of Chapter 9. There are a few other topics that are briefly covered, like individual retirement account investments and things like that. Those are pretty straightforward, and so I'm not going to spend a lot of time on those. I recommend that, of course, that you review the chapter and the PowerPoints. But the lion's share of the second half of Chapter 9, as I said, is this qualified business income calculation, which can get a little bit convoluted. So I want to spend adequate time demonstrating these. A couple of things. First of all, this spreadsheet will be posted to Blackboard. And this spreadsheet, series of spreadsheets, this workbook really, demonstrates some problems at the end of the chapter. In fact, all of the problems at the end of the chapter that deal with this QBI deduction for small businesses. So I have one with the actual data, one with some altered data, and then I have a template so that you can practice some of these problems using various data scenarios. And that sometimes can enrich the learning experience of these more complex topics. But I'll run through the actual problems with you that relate to QBI. And so what is QBI? This qualified business income deduction, which is what we're asked to calculate, allows small businesses the opportunity to reduce their taxable income by eliminating 20% of their taxable income from taxation if they qualify, if their business is small enough and they qualify, and their business is not what we call a specified service business, which I'll explain later. Now, the problems do advance in complexity until you get all the way down to the last problem, problem number 45. So I recommend that you walk through these problems to get a good sense of how to calculate them, how to apply the tests, and of course make the formulaic calculations, which will be demonstrated in this template. However, a couple things, I will be going through a few of the problems for you in this video, and then I strongly recommend that you read the notes that I have for strategic cells that describe the principles behind the calculations, the way to make the calculations, and in some cases why the calculations are made. So there I have several comments, and as the problems gain and increase in complexity, I have more and more of these comments that I really strongly recommend you go through. Because between this workbook and the examples and explanations in the textbook and their flowcharts in the textbook, you can gain a really solid understanding of this brand new deduction that's available for small businesses, which resulted from the passage of the 2017 Tax Cut and Jobs Act. So let's start out with an easier problem, number 39, and I'll do perhaps a few more, and then you can walk through all of these yourself. All right, so first of all, in problem number 39, found on page 952, Shelley has $200,000 of qualified business income. She paid $30,000 in W-2 wages and has $20,000 of qualified property. Shelley's spouse earns $74,000 of wages, $20,000 of interest income. They're filing joint take the center deduction. The question is, what is their QBI deduction, qualified business income deduction? One of the first things we need to look at, and I'm going to jump down here, is do the taxpayers exceed the threshold for their income, the lower threshold? Or is it less? And the way I have my scenario listed is the taxpayer's income less than? And I have yes, it is less than. And the amounts in the gray cells are intermediary calculations, yellow cells, final answer, and then in the blue shaded cells, that's the actual either data given in the problem or data that you have available to you from the text, such as the standard deduction for married filing joint. Otherwise, the rest of the information is given in the problem or the text. You can just enter the information only in the blue shaded cells. The rest contain formulas, as I said. Okay, so let's take a look then as we move forward. There are no capital gain. I listed them in these templates just because I wanted us to be aware of the fact that we do need to include the net capital gain in our calculations of adjusted taxable income if it applies. None of the problems, however, will have any capital gain. Another question we're going to need to ask, and I didn't include it here because I wanted just to start really simply, is the kind of business or type of business that's being operated. If it's a specified services business, which I'll explain later, then that's going to result in some new conditions and perhaps new calculations before determining what the QBI deduction is. We'll get to that later. In this case, it's not a specified service business, and the income is less than $315,000. That's going to really simplify things for us because it's going to eliminate a lot of calculations, and it suggests that these taxpayers are going to be able to take the full deduction, and we'll get to that deduction in a minute. All right, so let's take a look at this then. A couple of things I want to bring to our attention. One is that the threshold range is going to be the difference between the upper limit of $415,000 for a married filing joint and the lower limit of $315,000 for a married filing joint. So when the income gets up in this range or exceeds it, then we have some additional calculations to make to reduce this deduction. However, in this case, the taxpayers have qualified business income and as well as taxable income, which falls below the threshold. So they're at $270,000 for modified taxable income, and that's below $315,000. So there'll be no reduction of the 20% benefit deduction. So let's talk a little bit about what these numbers mean. So let's take a look at some of the calculations then regarding these limitations I mentioned earlier. They are the W-2 wages and the W-2 wages at 25% plus the capital investment at 2.5%. So these limitations then, and I'll just kind of highlight these here, these limitations are against the 20% total deduction for the qualified business income. And again, these limitations start to kick in when the taxpayer's taxable income before QBI begins to exceed $315,000 for a married filing joint. Now, I'd like to make just one observation here. If you look on page 9-29, Concept Summary 9.4, in the pink box, two of the pink boxes, they talk about these limitations regarding wages and the sum at 50% and the sum of the wages at 25% and 2.5% of the capital investment. And they say, they list it as wage capital investment limitation is the lesser of these two, 50% of wages or the sum of 25% of wages plus 2.5% of the capital investment. That should say greater than. So it should be, the limitation is the greater of 50% of the wages or the sum of 25% of the wages plus 2.5% of the capital investment. The rest of the chapter, they do have it listed correctly, but in that flow chart on page 929, that could be confusing. And just want to make sure you know that really should say the greater of 1 and 2 in those two boxes, and that the boxes are titled wage/capital investment limitation. So the two boxes titled wage capital investment limitation, at the very bottom it should say, for part 3, it should say the limitation is the greater of 1 and 2, not the lesser of. Okay, so let's talk a little bit about these limitations in more detail. What they're saying is that if the taxable income exceeds $315,000, then we need to begin to essentially phase out part of this 20% deduction of our qualified business income. And the test will be that we need to calculate first 50% of our wages. And so we know that our wages are $30,000. Let's just take 50% of that, and that'll be $15,000. There it is, $15,000. And we're going to compare that to 25% of those wages, So 25% times 30 is 7,500 plus 2.5% of our capital investment, which is 2.5% times the $20,000, which is the unadjusted basis of our property. And we're going to add these two together, and that totals 8,000. So which is greater, 8,000 or 15,000? Of course, and 15,000 is greater, so I'm going to list the 15,000 down here. Now, fortunately for these taxpayers, they don't need to worry about this calculation because their taxable income is less than $315,000. But I wanted, as I said, I wanted to demonstrate this just to get a running start on applying these calculations in further more complex problems. So yes, I went through the calculations so that for demonstration purposes, but these taxpayers, their income is below $315,000, they don't need to worry about the limitations for wages and capital investment. So in the final analysis then, for problem number 39, the QBI deduction will be $40,000, which will be, essentially it'll wind up being 20% of the qualified business income of $200,000. And I have a formula here. I just use the minimum function. And in this case, we're going to apply it against the $40,000 rather than the 20% against the modified taxable income of $270,000. And we'll explain that in greater detail later. But it's always the minimum, the lesser of, if you fully qualify, 20% of the business income or 20% of the total taxable income. And that's why I use that minimum function. Again, I strongly encourage that you read these comments I have available in many of these really important cells that explain the calculation and why it was calculated the way it was. All right, let's look at another problem then. And this one, let's look at number 42, and that's also on page 952. Please note that in row 92, it says refer to M59. That should say refer to M87. I copied down and pasted and forgot to update that. So that should be M87 reference in row 92. In problem 942, Donald owns a wide variety of commercial rental properties. Donald reports rental income of $1.5 million, paid no W-2 wages, but he pays a management fee to an S corporation that he owns. The management company pays W-2 wages but reports no income or loss. Donald's total unadjusted basis of commercial rental property is $10 million. Donald's taxable income before QBI deduction is $2 million. That's also his modified taxable income, so we don't need to worry about including the standard deduction anymore. They've made that calculation for us. So his modified taxable income is $2 million. Then it asks, of course, which all these problems asks, what is the QBI deduction for 2018? So this is a little interesting because now we're looking at income. This is for a single person. And the threshold for a single person, where this 20% begins to phase out, is $157,500 at the low end, and then add $50,000 to that. That's the range, and it goes up to $207,500. Well, if we look at his income, it's going to exceed this range. So we need to calculate and include then some of these limitations. Well, we know that one of the limitations is 50% of the wages. But in this case, there were no wages paid. So it's 50% of nothing. And then in the second case, it's 25% of the wages plus 2.5% of unadjusted basis of qualified property. Again, that's just going to be the 2.5% of the $2 million, since there are no wages. So the greater of these two is $250,000. So that is going to be the amount then that the 20% deduction may be reduced by. So now in step 4, I calculated the 25% of the taxable and modified taxable income before the QBI deduction, and that's going to be $400,000. And that calculation is going to be the QBI percent of 20% times the taxable income, which they gave us, the modified taxable income of $2 million. So 20% of $2 million is $400,000. And the QBI deduction will be the lesser of the two. And so in this case, we're just looking at the lesser of the limitation of $250,000 or the 20% of modified taxable income, and that is, of course, $250,000. So here the limitation did come into play because his income far exceeded the thresholds for the taxable income for a single person. All right, so that's a case where was it a specified service business, which we'll talk about later? No, so we don't need to worry about that. Did it exceed the lower and upper threshold? Yes, it did. And then now that's going to mean we are going to have to, as I said, include these limitations to determine the amount of the deduction. So in this case, we're only getting a deduction for 2.5% of the $10 million of unadjusted basis of the property, because that's less than the $400,000, which is 20% of the taxable income before the QBI deduction of $2 million. Okay, so that's how we would calculate a situation where the income is so high that we now need to consider these limitations regarding wages and the value, 2.5% of the value of the qualified property. All right, so that's one example of a limitation. Let's look at one. This one's turns out to be a simple problem, but it does bring in something new, and I will be discussing this problem and the next in the next video.